Okay, you're good to go. Go ahead.
Good evening, my name is Henry, and I'm the fundamental analyst.
Speak up, please.
Good evening, my name is Henry, and I'm the fundamental analyst for Derivative Trading Corporation. And today I'm going to run through my fundamental analysis and show some of the assumptions that I made for our stocks. So here's the list of our holdings, primarily large cap tech companies with some consumer discretionary. And these stock prices are as of 11/13/2019. And just at a high level, the way that I made the assumptions for the stocks is that I kept the same expected return for all the stocks, being that they were all large cap growth companies at 8, 9, and 10%, and 9% is the actual expected rate of return that we use for the weighted price. And for the Gordon growth model, same thing, we used 8, 9, and 10% for most of the stocks. The only times that I changed the growth rates were that if it was a more mature company that I didn't expect to grow as fast as the smaller companies, then I would bring the growth rates down to about 5 to 7%. For the multiples, I started with a baseline of 19 price earnings ratio, which is S&P's PE ratio. But for certain companies where that didn't make sense, I used their company-specific ratio. Some companies are trading at 40 times earnings, which then helped the weighted price. And for the DCF, I applied the same growth rates for the earnings, which I don't know you can see here. I'll go to a specific company so you can see what I used. So basically right here is where you can see the growth rate percentages that I use for earnings. And essentially the S&P's been growing for the last 10 years on an average rate of 15 to 20%. There's been a bull market. And I still applied a 10% earnings growth rate for 2020, but obviously, as we've talked about before, we're at the peak of earnings growth, and so then I slow down the growth into 2021, 2022. There's actually an earnings contraction, and then I level earnings out. But in 2024, I forecasted a rebound, which typically occurs after a recession. And for most of my stocks, the premiums and discounts were between, I want to say 10% discount and 10% premium. There were a couple of exceptions where there may have been discounted about 30 to 40%. And when I found this, I went to the specific stock to see what the story was. And for one example, Johnson & Johnson. So they're trading at a 44% discount right now. And the reason that I stuck with that is because Johnson & Johnson came out about 6 months, a year ago with a report that their baby powder may have been may have contained asbestos, and so the stock got battered pretty hard, and it's been trading below its 52-week high for a while now, and so that's the reason I stuck with the 44% discount recommendations, because I believe that the stock is undervalued because of the bad news, and that based off fundamentals and their earnings, it should rebound once the bad news is out of the way. Yeah, that's how I approached my fundamental analysis. Thank you.
Yeah. Beautifully said.
Are there any questions before I unplug?
Give it up again, yeah.
DC. Can I have the next speaker, please? Can you go?
I don't have anything.
Just get up there and you can tell us what you've been doing over the last month. Can you please get up there?
I know, but I don't have anything.
You can just get up there and tell us what you've been doing.
I've been finishing the deliverable.
Okay, go ahead. Go ahead. What is your role? What are you doing? What do you do? Are you the fundamental analyst or are you?
Technical.
Okay, get up there and walk us through what you've been doing in regards to the technical analysis.
didn't bring anything with me. I don't have my laptop or my technical.
But can you just walk us through how you've been conducting your technical analysis?
Okay, so the first thing I did was go on stock charts, and I got all the things up, the 10, 30, 50, and then I took off the stock line, so only the lines remained. And then I put in the price labels, and I printed everything out, and then I wrote on it. I looked at when it crossed, when 10 and 30 cross 50, and that's the buy, and then when it crosses back, that's the sell. So I just wrote everything down for each and everything, and I just printed it out in A4 size sheets and wrote everything down. And then I looked at the price and the number of shares we had for the thing, for the company, and wrote it down in the technical analysis spreadsheet. And everything just automatically calculates.
And what stocks are you, can you give us some examples of what stocks you've conducted technical analysis on?
There was Apple, Facebook, of course, Microsoft. There were a lot of defense stocks, and I still looked there, Netflix, Starbucks. There was just a lot of them.
And have you, were you able to make any money?
Yes.
Okay, well, we look forward to seeing that. So when do you think you'll be able to give us that analysis?
Tuesday.
Okay, perfect.
I just didn't make the presentation yet, that's why I didn't do it. But I think
It doesn't matter. It's just, you don't have to apologize for anything. You just gotta, you do the best you can. It's called self-efficacy. In business, there's no such thing as failure, so you never have to apologize. It's all you have to do is get up there and do the best you can, and then come back and do it again.
Good job.
Okay, Alex, I'll take it. Or Rex, sorry.
Show me what you have, sort of.
Okay.
Definitely show the automated shit.
Like, I got a part one.
This is what you can do.
Go through the run.
I thought I was telling you.
This is just a
My
plan.
model.
You know, run their description.
you know how long it's gonna be to buy Fisher French here?
Usually, I have it every stock. And then I just made the same
I
rate.
didn't make a last
And then after I looked at what the fuck that, it was like 200% PE, I was like, that's not right. So I changed their PE multiples. And sometimes I fiddle with this, but most of it have to. I don't think they're gonna grow that fast. Because their earnings are gonna
These
triple.
need to be one.
That's great.
So I didn't have a problem with any of
Oh, is he telling me to do everything again?
Amazingly, some stocks are trading at 45 times.
Okay.
If it's not working.
Yeah.
this is the chapter presentation.
This one's trading 34 times, like twice as
That,
expensive as the S&P, as a NVIDIA. Yeah, like the
There's
semis.
there's no futures on.
Like 53 times earnings.
So you can go back and look at the template.
I believe for the covariance matrix,
So he was trading this.
the whole box.
Did you go to the
Oh, so sorry.
I didn't have that.
They were,
And so he was trading at 80 times earnings.
they were
His
1,000.
long-term average is like 25 times earnings. What are we at right now? Like, just under 20.
I like how intensely I'm looking at this donut. I really like what it, oh, because I was looking for the frosting. Why am I looking so intense?
But you gotta work with it because that's not gonna go. Is this, what's this? You already gave me two.
Oh, this was there?
So what is
I think
this?
there's a color page.
Well, what is it? Well, I'm confused, I have two of these. Oh, this is the active, and what's the other?
That's the passive.
Okay, this is the, okay, you gotta give me two of these.
Oh, like two separate.
Memo, spreadsheets, flip together. I don't know, I didn't see the memo. I don't know, I didn't do this.
It's like a memo.
Yeah, it's supposed to be,
If it's not the way I like it, I don't like it.
maybe stocks always a little
Yeah,
The
I
memo too?
handed it around, actually,
Current,
Colby
yeah, the
actually
memo
did.
for all of those, and then also.
Were you here last class? Yeah, I handed it around.
For active portfolio.
Colby, didn't I ask you to walk around and show
Yeah,
everybody?
they did it 2 different classes.
Didn't you do it 2 times?
Yeah, I did it twice.
Then you got a picture of us. Okay, so that's what I got. Okay. Yeah, you bury them. Yeah, there's a specific way to do it. And if it's not the way I like it.
Wait, so how many memos are you having?
So it's
2
just
memos? Not
Yeah, you gotta
including.
change it. Change it
No,
around.
so not including portfolio, I mean, one stock,
the memo.
stock, wine, oil,
5 plus the
You're the
portfolio.
portfolio manager.
Oil, bonds, stock.
Yeah, so you
It's
have
the deliverable too?
You don't have that.
And for deliverable too.
Wild.
All 5?
Yeah, we submitted the first week.
He looks like a,
Yeah.
I did only 6.
he looks like a man that might just.
Are we supposed to do like?
Says it on the, it says it on the syllabus.
He is a stock. He took it and he was like, okay. Wow.
You got lucky. Now you gotta submit all 5.
Which is stock, bond, oil.
Yeah, memo 135, stock, oil, bonds, bonds.
Yeah.
Definitely did that.
Stock, currency, bonds.
All like in times Roman, free from.
Did they just present?
Times Roman.
That other group, I think I figured out.
And then where's your deliverable?
Hey, you guys wanna split up the final?
Yes.
Oh, we have the final already? We don't have a
You guys have signed it.
Oh, yeah.
I do, they don't have any technical.
Wait, is it online already?
Where's the
It's the
deliverable?
same shit as what we did. The textbook? Yeah.
Oh, that's a deliverable 3 now, huh?
Mixed it in,
That means big.
as to.
Yeah.
Oh, 35 pages. My God, what? Oh, bro.
I do it by myself.
Yeah, she does it by herself, bro. Why would you not want it?
And I just give it to
I just
them.
recruited you on our squad.
Normally I do it by myself.
You do learn more, I guess.
Yeah, so you get a copy.
Down to do with it.
Yeah, dude, that's 8.75
By
pages.
Damn, that's just weird.
Normally I'm doing like 60.
We do like one sentence. Alright, send pics.
Wait, what about your other?
Where is
So
it?
they get the
It's
answers.
only 2 pics of that.
It's gonna be separate.
If Fox is okay with it. I just thought we're doing like 5 pages a
You
each.
gotta, I'm gonna talk to somebody after I make sure that you have it.
Wait, with Julia, it's 8 point something?
Yeah, 8.75.
What, 8%?
How long is it?
35.
Then okay, perfect, so you know exactly what you need to read.
35
I know I left.
Okay, that's
So
right.
we're at about 5 points.
I forget.
They won't do it.
They won't.
I send them the answers.
Like, they'll be waiting to like, oh,
Yeah.
look at it, so it's like a minute.
Hey,
Do it
you
now.
gotta sink or swim here, man. That's not cool. That's not fair to you. I wanna be sending you.
I know, I don't any, I did it for the first one, but they
Dude,
haven't.
dude, Julia's been noticed.
Yeah, like, Eliana asked me for the midterm.
What's another midterm we have to do? I don't know what I do, I just fucking did everything, I didn't get hold of it, just just made explanation, made explanation.
There was the
So am I
bug.
supposed to copy from the line, so we're here?
PowerPoint that he gave us.
The dissertation.
I would rerun the PowerPoint and then go.
Uh-huh, yeah.
Yeah, there's a whole.
Ying Wen?
You know what I mean? Just goes, just
Ying
that's what
Wen?
you have.
Yeah.
You know, you don't have to worry about it. Yeah. Means that.
Do the multiple.
It's not my responsibility.
So, over here, copy paste.
Sink or swim.
Yeah.
Hey, you just said that.
Oh, is that what you said?
Steve just said it.
Who did?
Steve.
Okay.
What?
He just said sink or swim.
Sorry about that, you can like monitor.
Well, no.
That's what they're gonna do, they're just gonna like throw you out there and see what you're gonna do.
Exactly.
They can keep you or fire you.
It'll be nice to know.
Cells, so those cells that are changing are
Only for
gonna be
me.
the cells, you know, that are, gonna give you the weight for it, so.
Right after.
Everything you know that you-
Yeah, well, yeah, plus, the red.
Okay.
One of the women,
So those are the ones you're gonna want.
she studied in American
You know, insert into each,
so she's
desired return.
US is 13.
And her
In
nickname,
China?
Which is wrong.
yeah,
That's crazy.
and her nickname meant
He represented here.
firm dick.
No, it's good.
She like explained it to us.
Oh, God.
My whole group started fucking
That would
Wait,
not
in
work.
English?
That would not work in America.
Yeah, because she's like,
12.7.
she was serious because she's like, I am like
Okay.
steadfast and
So
hard.
it's already
Oh, like,
So her nickname, she literally talked about like a foul in front of the class.
Oh,
something
shit. Oh, it's doing this.
Everyone calls me this.
Oh. You know, I was also messing around with these.
Yeah. I wanna do that.
It was crazy.
It's like being called like an asshole.
Okay.
I'm like, I don't know if it's a good nickname.
Not America.
And he said after doing everything, I just do the capital allocation line. So,
Yeah.
which
And
one is
that'll
here?
give you, that should be on the exam sheet right there. Follow that and you got it.
I should burn them in tuning with next semester. That's a lot of business in China.
Really?
Yeah, because they do cross-border transactions, primarily in Asia. So it's super interesting. M&A.
Well, they've got good growth at 6% this year.
It's mostly
We'll
So
never
they
know.
say.
We'll never know, Steve.
It's mostly investment in Europe.
Like my bank or like China?
No, China. In terms of like.
Oh, so no, so it would be on. They have, but it's obviously like in the last year since the trade wars happened, that's been shelled up. So then they pivoted to Southeast Asia, like India, Singapore.
No,
Ton of-
for investment in China, they kind of look into like this.
Yeah, yeah. That's one of the parts of the negotiations. It's not open at all.
I'm surprised it's getting hung up on soybeans.
That's what we
Yeah,
presented
dude.
on today.
Dude,
What's
the
the
US, wants China to buy more of our goods, man.
Yeah. I mean, yeah, but I thought we were, square on that. We were more worried about, IP.
And just tariffs.
They are developing a new court system in China that's more focused on actual, like economics.
And not just like,
Not just
No,
communism.
I mean, I mean IP courts.
Oh, yeah.
Because it was settled through arbitrage or whatever the fuck it's called. Where they just look at previous cases and then settle like based on yeah. But now they're transitioning to actually be economic, like the US is.
That'd be fucking pretty cool.
Like how much money are they actually stealing by using someone else's
Okay,
IP?
you guys, we're ready.
We're doing technical,
For range,
yeah,
yeah, you gotta do 3 years.
I was
for the China.
Oh,
between
yeah.
the range to 3 years.
Same thing, I guess.
And the type is invisible. We mark the price labels and after we got the chart.
Oh, I see.
Yeah, and we change the overlays to
Are you
10,
making the
30.
presentation?
Yeah.
Oh, you're doing it?
Yeah.
Oh, I thought you were just setting it up.
Oh, I'm just explaining.
Oh, you may want to do an introduction so that we know what you guys are doing.
Okay.
I didn't know you were presenting. I thought you were just talking to each other.
I want to introduce, hi everyone, my name is Zheng and
My name is Yuhan.
we are doing the technique. So first we chose the
Can you
stock
speak
list.
up, please?
We chose the stock list platform and we set up this.
We set up the range to 3 years, types high phase is invisible, update and got the line. And then we change the numbers, the simple move average 10, 30 and 50 update. Then we got the so when the 10 and 30 above the 50, we buy the stock. When the 10 and 30 below the 50, we selling the stock. And at the beginning, so
And also later we just insert the number to the Excel, the worksheet, and
and then we will
case. Don't put the homework and the delivery 2 pages the same.
Okay.
Yeah,
Oh, yeah.
and then make sure
No,
that all the stuff
you
is
get any
put together.
Yeah, exactly.
Yeah, I guess.
I also want to tell you guys how we do the fundamental. The first is.
Can't hear you. Can you guys not talk when somebody's presenting? I'm trying to listen.
The last 12
Can you
months.
hold on a second? Can you hold on a second? I'm sorry. Can you guys whisper in each other's ears? You're distracting me, I can't hear.
I think she just like wanted to look at all their presentations, so we assume that they're switching on presentations.
I don't know what's going on.
Usually,
Yeah, so we're kind of confused.
So right now we're doing the fundamental.
Okay, did you guys already do the technical?
Yes.
Oh, that was the technical stuff?
No, we just finished everything we did.
Oh, you already finished the technical analysis?
Yeah, but you say you want she do the technical today, but she's so far. No, she only did half job, like,
Okay, are you guys making money?
you know.
You're not making money on the technical analysis?
Oh, I mean, we haven't done it, I'm not sure.
But you've done the trades, you've done some of the analysis, right?
Yes,
And have you been making any money on your trades?
yes.
Okay, excellent. All right. So are you guys done, or are you working with her?
I'm also working with
Okay,
fundamental.
okay, awesome. Okay, so make sure you speak up and speak loud, because I used to surf for, 20 years, and I have hard hearing because of the cold water. So you need to speak loud. Okay?
How we do this worksheets, like, we last all 12 months, earning per share. And this is the number we got, and also we
You gotta check
enter the P ratio to the multiple. One by each one. And we saw the average, because the annual growth rate, last year, the average. And also we saw the estimates, growth in next year, and this number we got, it's like, 8%. Now the Apple give the shareholder like $12 per year, and we estimate like, I mean, we guess the next year like they gonna give the shareholder like $30 and $1 growth each year. And this number we got, and also the company.
Oh, okay, so you don't need a coverage.
With all the growth rate we estimate, so
Yeah,
that's the number. And there's many samples we did here. It's the same we did in the Apple.
Yeah, can we do some of these?
Yeah, like up there.
Yeah, yeah, and then print it out 3 more.
Okay, so based on our calculation, we highly encourage our portfolio manager to invest in technology and consumer goods every year. Because there was a one stock, like the estimate growth rate's pretty good, which is Disney right now. Even though on my research it says it's overpriced, but we think it is it's working really well because recently they just cooperate with Amazon together to working on the Disney Plus channel. So I think that is pretty promising area. For the next 5 years, their stock price is going to keep going up. That's our assumption. And also for Costco, we think the Costco is doing really well as well, since they did open like the stores globally, expanded globally. They opened they're planning to open like 2 to 5 stores in China, and right now they're doing really well. So that's our assumption, fundamental analysis, and then that's.
And did you say that you were done with all the stocks?
What would you mean by that?
Have you conducted the intrinsic valuation for all of the stocks?
Yeah, we did.
And then do you have a table that shows premium to discount? And then what was your highest premium and your biggest discount?
I think the highest right now.
It's 37.
So you think the stock price will go up 37% over the next 2 years?
Yeah.
And what stock was that? And what was your highest, what was your,
34.
which stock is that?
The AMG.
Is that Amgen?
Yeah.
Is that Amgen? Has it ever reached that much before? Has it ever hit 159 in the past? It's an all-time high. Yeah, check the technical chart, see if that's possible. It's found a probable premium if from the technical analysis, you can show that it's either in a strong upward trend, either intermediate or long-term trend, or that it just bounced off the support, and that it's coming off of a support and will run, you know, it'll catch up.
Okay.
You know what I'm saying? So just check it.
So what if they reach that high? Is that okay?
Before in the past?
Yeah.
Then there's a probability it could go that high again.
Sure.
And if it's bouncing off the support, and you're forecasting it to have, you know, good growth rates, you know, EPS going out over the next 5 years, 5, 6 years, then there is a probability that it could actually go up 34%.
Okay.
You just got to feel comfortable about it. And if you're not comfortable about it, then bring down the growth rates and bring down the premium. Okay. Thank you. Colby, you want to work with, and Stephen, you should work with Douglas
Okay.
Chan on the memos.
On the memos?
Maybe he'll be nice enough to give you the template, and then you can use your data and analysis to update his template.
Okay.
So you're not spending all the time doing this on it.
Try.
I'll be looking inside.
If anyone needs help with it,
Yeah, but shoot me over the template, just if mine's a little marginalized.
I would get it from Douglas. He's got the best, because he's been through my class.
Good to go.
Stephen, what's the deal on this proposal?
Which one?
Yes. Did you figure it out?
Yeah, it kind of sorted itself out. We had
Oh, did it? Okay.
had to go through, redo
Yeah,
the
you-
matrices.
Okay. Douglas, did you give me your resume?
Yeah, there's one.
Yeah, make sure you put it back in, Liverpool too.
Yeah.
I'm ready for you. You want to print these out? Print them out. Hey, can you work with some of these people on their numbers? Yours, obviously. Thank you. Okay, send Don, I'll talk to you now. You gotta put in your terms. You need to state that you're endorsing something. You can put the PowerPoint presentation and flip it. Just move everything up. Make sure on the first slide that you give me the three main sectors that make up the majority of the portfolio.
I have it
Later, I'm just saying on the first slide.
in here.
Yeah, because you don't really tell me what makes up the large cap defensive.
Okay.
The sectors right up now. Tell me.
Okay.
Good evening, everybody. My name is Kong Yuan. I am the portfolio manager of our group. This is my colleague, Dong Li and Spencer. We will be presenting our actively managed large cap defensive portfolio. We recommend DTC launch a new series of both retail and institutional large cap active growth portfolio products. We target DTC moderate high returns of 12% to 15% with low moderate risk with a beta of 0.9. Our targeted investor segments are both institutional and retail clients with the aim of a 50-50 split for $2 billion total AUM, asset under management, within 5 years. The desired holding periods are 5 years for retail clients and 15 years for institutional. Our fees will be 1.5% of our AUM, leading to a total annual gross fee revenue of $30 million. In this presentation, I will go over our recommendation, portfolio recommendation, largest holdings, portfolio performance, target market, fee structures, and finally, my colleagues will go over their parts of technical and fundamental analysis. In our active portfolio, our largest holding will be technology sector with a little less than 40%, and coming in second is communications at 16.65% and consumer discretionary with 16.55%, financials at 20%, and energy at 7%. And all of the companies that we selected are large caps. Our largest holding is Apple at 9%, tied with Amazon, and Adobe, Berkshire Hathaway are both at 8%, and Facebook at 7%. Our active portfolio generated roughly 110 to 480 basis points in returns over a 10-year period with a beta higher than the benchmark. Our target market, it will be a 50-50 split of institutional and retail investors. Our target asset under management of $2 billion portfolio within 5 years. The desired holding period of 4 to 5 years for retail clients and 15 to 30 years for institutional. We're targeting investors desiring stable long-term returns, such as retirement accounts, 401ks, IRAs, or ETFs. Our fee structure for our active portfolio, like I said earlier, will be based on the $2 billion asset under management for a 1.5% fee that generates fee revenue of $30 million. We recommend DTC launch a new series of both retail and institutional large cap active growth portfolio products. We target DTC moderate to high return this should be 12% to 15% with low to moderate risk with a beta of, that should also be 0.9. Our targeted investor segments are both institutional and retail clients with the aim of 50-50 split of $2 billion total asset under management within 5 years. The desired holding periods of 5+ years for retail clients and 15+ years for institutional. Our fees will be 1.5% of AUM, leading to a total annual gross fee revenue of $30 million. And my colleague Tony will discuss.
I'm the fundamental analyst. This is my prediction of our top 5 weighted companies. So we predict the Apple will have 18% growth in the next year, and Amazon have 5%, and Adobe have -10%, and Berkshire Hathaway have 7%, and Facebook have -5%. So according to my projection, so we consider we will have like lower the weight for Adobe and Facebook.
Yeah, I'm the technical analyst, and so we're using our interfaces to sort of justify our active strategy and to sort of justify the fee that we're charging our customers. Say just going back 3 years and sort of checking the alerts and signals to buy and sell and sort of cut our losses and even justify buying a margin in the future. We noticed that because our portfolio is 40% sort of tech, there's a lot of sort of volatility and uncertainty with that sector, especially given the current state of the market. But we at DTC sort of believe that you can sort of make money in any sort of market, and yeah, it's sort of, we don't really have that many visuals for this technical analysis part, but yeah. Any questions?
Have you made any money on the technical analysis?
Yes, we just don't have the figures right now. It's on a desktop. And I forgot that part.
Now, are you using the 50?
Oh yeah, we just pulled up the visual.
What are you using for the moving average crossover system?
Possible moving average 10, 30, 50.
Okay. And then have you put any of the trades into the profit loss statement?
Yeah, on the desktop. Like I said, like a lot of the companies, sort of like the McDonald's of the world, you don't really have to actively manage per se, because you're sort of generally going in the direction they will go, despite sort of market noise and all that. But for stuff like Apple, the IPOs like Snapchat, and like data breaches from Facebook, and of course like 2018 there's a lot of volatility, so as we actively manage this sort of portfolio, we expect to justify our fees and provide our customers with a great product.
I have a question on the fundamental analysis.
Steve, how much do you guys take right now?
Can you pull up that slide one more time? I really didn't understand.
Very respectfully.
Yeah, I didn't understand that. Can you walk me through that again?
So this number is the Excel sheet, the number that I got from the Excel sheet.
Yeah, are those weights or are those,
No,
is
it's
that
the
the forecast or is that the
premium.
premium or the discount? Oh, it's the premium? Don't you want to sort them from premium to discount?
Because this is our top five weighted company. So Apple and Amazon is the top weighted company.
I think she's saying it's like an organization error. These are our top 5 votes, but those are sort of premiums and discounts. We have just exact time.
Oh, okay.
Kind of messed up.
Okay. Can you walk me through how you did like one stock? How you did the fundamental securities analysis on one stock? You could just use Apple's fine, because I think we beat that one to death. Right, we're all pretty comfortable with it. Is that Apple?
Yeah, this is.
Yeah, okay, so walk us through the switch.
So I found that the EPS for Apple this year is 11.75.
Okay, did you forecast it yourself, or did you get it from somebody else?
I get it from the
Oh, who'd you get it from?
online.
Oh, from where?
Lasta?
Okay, do you think that's correct?
Yes.
You must know those guys pretty well, right? So how did you come up with the discount rates? With the expected rates of return?
Which one?
I'm not cheap.
How did you come up with the expected returns or the discount rates?
The perpetuity or growth. The decimals there.
How did you come up with the expected returns?
This one?
Yeah, how'd you come up with those?
It's already there.
Oh, so you used my recommendation?
Yeah.
Okay. And then how did you come up with the weights for the valuation models?
This one?
No, that's the weighted price. How'd you come up with the weights?
On the top.
Oh. It's still your recommendation.
Okay, I'll take it. And then how did you come up with the constant growth rates
Here?
in the Gordon growth model? How did you come up with the constant growth rates?
Just keep going on.
Oh, well, aren't you surprised that the valuations using Gordon growth are significantly below the current stock price? I said, aren't you surprised that the valuations from the Gordon growth model are significantly below the current stock price? I mean, doesn't that, I mean, aren't you surprised about that?
Yes.
Yeah, so don't you think that your constant growth rate assumptions are too low? I mean, aren't you a little surprised that the evaluations from the Gordon growth model are significantly less than the current price?
Yes.
Yeah, and then don't you think that the constant growth rates are too low?
So you mean this?
Yeah, the Gordon growth model.
Oh,
The second.
oh yeah.
Don't you think that the intrinsic values, weren't you surprised that the intrinsic values were too low? And don't you think that your constant growth rates are too low? Let her figure it out. Were you surprised that the intrinsic values were significantly less than the current stock price?
Yes.
And don't you think that your constant growth rates are too low?
Yeah, this kind of.
Yeah.
What's it trading
It's right, it's at 230, she's got 239.
at?
It's
And
not
then,
today's price.
and then
Yeah.
where's the current PE multiple?
Oh, two.
Yeah, where's Apple currently trading on a multiple basis, on its PE multiple? It's at 22? So you think that you think the PE multiple is gonna drop 200 basis points over the next year? Because you're using 20. What's the current multiple right now?
22.
22.
Because I did it like last week.
So you think Apple's multiple is going to drop to 20 next year? And it's currently trading at 22. So where do you think it's going to be next year?
I think it will be high.
What do you think it's going to be?
23 or 4.
What is it?
23 or 4.
23 or 4? So would you want to use 24, 23, and 22 as opposed to 21, 20, and 19?
She's having a bad time.
Yeah, and then what was the earnings per share growth rate that you got between 2018 and 19, or even 2017 and 18? What was the historical EPS growth rates? Do you remember?
For 2019.
Between 2017 and 18 and 18 and 19. Okay. So you're pretty confident that the earnings per share will grow 8% next year?
Yes.
And you think it's going to taper off, but stay positive over the next 4 years?
Yeah, yeah.
Okay. And then, are you comfortable with the terminal growth rate of 5%? Are you comfortable with that?
For Apple.
Yeah, do you think that they can grow their earnings per share on average at 5% per year forever?
I think it's for like at least 10 years.
5%?
Yeah.
All right. Okay, thank you. All right. So you guys probably want to take note of that conversation, so that when you're doing your presentation, when I start asking you questions, you know what questions I'm going to ask. Or actually, a lot of those questions should be coming from you guys. Huh?
All right.
Probably.
So
You
I
should be
just
recording
wanted
it.
dice and I got this. That's all I came to do.
Wait,
But you should
are
be
we talking
recording
about
all.
Apple still?
So I used the random walk down. So I had a monkey throw me his star. Overweight.
We got to the end, which is like Apple. Oh, I've heard about all these. What do you want to know?
Are you ready to
Presented
present?
on that 8 times.
Portfolios?
So I've been working with Steven, my
Why don't you
portfolio.
go ahead and just present what you've done so far.
What I've pretty much done is just look over it.
Yeah, why don't you just walk us through it,
Okay.
pull it up and show us what you're doing. Am I being too tough?
No.
No. Isn't this what's gonna happen? Isn't this what happens?
I don't think some technical analysts were expecting to go today, but for fundamentals.
Yeah, I wanted fundamentals.
Yeah,
on
do
it.
you have that HTML?
Yeah.
But that's okay, it's a good practice.
Email to yourself and bring it up on the desktop.
You can call it a driver.
I'll take a couple of minutes, I'm just emailing.
Just pull up the Excel spreadsheet.
Yeah, I'm mailing it to myself, actually.
Okay.
Thank you.
Oh, really? Maybe that's why I think that's why he said that too. That's like their Amazon.
Is everybody gone?
This is just,
Huh?
this is just what's here.
Oh, okay. You got one more, and then I'm gonna talk about the target portfolio.
Nuts, dude, do that every day. Let's go. Become more valuable in every country combined.
I'll do the target portfolio. While he pulls up.
It wasn't good, They made, dude.
Okay, so here's the methodology around coming up with a target portfolio. So how many products do we have?
We have 4, with the passive, active.
Yeah, we got the target, we got the active, we got the passive. What else can we sell?
We can sell our technical analysis.
We can sell technical analysis, we can sell the research. Yeah, exactly. Okay. So we have a series of products and services we can do. So when you're coming up with a final target portfolio allocation, don't forget to save down the active Excel backtest worksheet as a target, okay? And then what you're gonna do is and you should have a slide on this, where basically you have the target portfolio allocation in the middle, and then you have the passive on one side and you got the active on the other, okay? So you can see it, in an allocation way. So this is the way I would approach it to come up with a final target. First thing I would do is I would set the minimums and the maximums, okay? Based on your first passive portfolio, right? Because didn't we do that for the passive? Didn't we set a constraint portfolio? So we set the minimums and the maximums, and then basically allowed the portfolio to allocate within it based off of the passive weights. And then now what you do is you take the target, you take the active portfolio allocations, and you basically use that to guide you to overweight and maybe slightly underweight some of the stocks. But it's going to help guide you on what stocks you should overweight based on the active optimization outcomes. Then what you're going to do is you're going to talk to your fundamental securities analyst, because they will have sorted the stocks from premium to discount. And then you want to overweight the stocks, probably the top 5 stocks that are getting the highest premiums if they were calculated correctly. And then the ones that are going to be trading at a discount, those are the ones that you're going to want to underweight, because those are the ones that are going to they're going to underperform. And then you're going to talk to your technical analyst to confirm a lot of this stuff. And your technical analyst will walk you through the individual charts, and they will show you what stocks have been in a solid upward trend over the last 3 years. Microsoft is one. Then there actually may be some stocks that have been trading in a range, or bottomed out, over the last year, and are now in a solid upward trend. And based on recent earnings announcements and recent press releases on future revenue growth and new products and services that the company is going to be launching to basically drive earnings growth in the future, you get confirmation from the technical analysts that these are the stocks that we should overweight and underweight based on the technical analysis. Do I want to overweight stocks that have been trading in a trading range for a long time? Probably not. Do we want to overweight stocks that have been in a fairly solid downward trend over the last year? Probably not. Okay. So the technical analysis, in conjunction with the fundamental analysis, in conjunction with the active portfolio outputs, will allow you to arrive at a target portfolio allocation that you're comfortable with, that you could recommend your clients. Then what you do is you go back to your target Excel backtest file and you adjust the market caps to replicate those weights. And now you have the backtest and the forward test for your target portfolio. What you want to do also is add in one more front test and forecast where your stock prices are going to be at the end of December. So now you have 4 front tests, the 30, 60, the 90, and the 120-day forward tests. And then you got the 1, 3, 5, 10 on the back test. That should give you a really good feeling for the performance of not only your target portfolio, which is going to be the portfolio, your marquee portfolio that you're going to sell to your clients. And you're going to charge a higher fee because you're using technical and fundamental and you're doing all that brain damage to come up with the final allocations. And then you're going to present the active portfolio. Actually, your fee structure should be higher on the active portfolio than on your target, because your target has some of the passive components to it. And then you're going to charge less on the passive portfolio. Then from that, you're going to have your 3 portfolio products that you're going to sell. And then what you need to do is you need to have your fundamental securities analyst in your final presentation not only walk us through how you arrive at the premium discounts, but also you got to tell us that we can also make money by selling the research, to clients and come up with some number, a couple $1 million or something. And then the technical analysts, you guys, we could also sell that strategy, not only as a long-short strategy, but we could also leverage your trades not only by buying on margin and going short, but also we can write and buy option contracts on your trade recommendations. And then for the technical analysts, what I would do is I would run 3 profit loss scenarios. One using the passive number of shares, the target number of shares, and the active number of shares, just so that you can show how much money you can make, for each of the individual strategies in conjunction with the rates of return on those portfolios that you can get just by holding the underlying portfolio. Does that answer all your questions? Make sure that that the fundamentalists print out those fundamental worksheets and put those in the appendix under fundamental analysis worksheets. The technical analysts, you want to put the profit loss statement along with your worksheets, in the back under technical analysis worksheets in the appendix. And make sure that in your report and in the PowerPoint presentation that you show us the efficient frontier, because that's going to be extremely important when you're active. And you want to make sure that you show us the chart where you forecasted the returns. fundamentalists, you want to show us the premium to discount table, and you want to show us the financial ratio table too. Okay, and I'll work with you on that over the next couple of weeks to get the report put together along with the final presentation. Okay, and I'm available if you have any questions or anything like that. Okay, all right. So you guys should have a lot of product when you walk out of here. And then you all need to meet with me at least once to go over your memos.
Not you though, right?
Got it? Yeah, okay. Yeah, that's you're a good student, you just have to attend those.
Should I just present what I did?
Yeah, go for it.
So good evening, I'm Raghav, I'm the portfolio manager, and this is our active portfolio, active large cap defensive growth portfolio. And we've selected a bunch of 25 stocks, being bullish on banking, financial services, and pharmaceuticals and retail. And we also have a few REITs and tech stocks, including cannabis. So far, what I've done is just like follow the steps. I've carried out the descriptive statistics. Before that, I've pulled out the 10 years of data for all the 25 stocks using the old NASDAQ link website. And we pull out the data and we run the descriptive statistics. And then I moved on to run the correlation matrix and the covariance matrix. The covariance matrix helped me kind of get an idea about like how the returns of each stock are in regards to like what every individual stock by themselves, and give me an idea about how positive and negative it is. And the correlation matrix gave me a more better understanding about the strength of it. And fairly so far, from what I've analyzed, our stocks have like a overall correlation of like around 0.2, 0.3, so it's not really like being correlated to each other. Then moving on, I've been working on the stock portfolio optimization. I have carried out my forecast returns, and I'm bullish on Ross, which is about 13%, and the rest have been around 8% to 11%. So like I said, these are all growth stocks. You could see they're all like large cap growth stocks. So like each company has like had a story, and they've been outperforming the S&P and the markets overall, and they're like the known ones in their own sector. So I would call it a growth large cap defense stock portfolio. And with the forecasted returns, I have moved on to calculate my efficient frontier and capital allocation line. And so far I have had some technical difficulties with it, so I'm somewhere around the cell number 3. So yeah, and I believe the slope and Sharpe ratio, I want to find the one with the highest slope Sharpe ratio, which will give me the most alpha premium. So yeah, it's still not worked completely. I'm like over here, so I got to work it all the way down there and
Oh, okay.
yeah. Yeah, I've just been having technical difficulties like numbers.
So how far have you gone so far?
Over here. I just finished this.
The third one?
Yeah.
Yeah, let me see what the efficient frontier looks like.
Oh, it's
Yeah, I know it's gonna look weird, but I wanna see how it's okay, so it's gonna straighten itself out. Yeah, it's gonna straighten itself out. Okay. So keep going, you're doing fine.
yeah.
Okay.
Thank you.
All right, so who has chapter presentations to do for next Tuesday.
Next Tuesday, we'll have what, 3?
Yeah,
3 per,
yeah.
We're not going,
So,
because we're fit,
are
we're
you
chapter
guys gonna
5,
be,
so
you're
we're
gonna
not
do
going
your
Tuesday.
chapters next
Tuesday.
Tuesday?
Yeah, we're not presenting chapters.
It's in the
What?
syllabus.
But
It's by
What?
team.
is 1 through
So
3
it's chapter by
Tuesday? We're 5.
Yeah,
oh, so we're Thursday.
I
Yeah.
think,
yeah.
but also
So we'll do
security.
some more presentations, and I wanna get through the chapters, and then we'll have any leftover presentations on Thursday next week, right? And then we'll do some problems, okay? And then we'll come back after Thanksgiving, and we'll do the target presentations, because we only need 1, right? And if there's anybody that's lagging, or needs more time, we'll have to push it to the flag. Okay.
Yeah,
Okay.
just once.
All right.
Oh, yeah, no, I didn't.
So that's it.
Yeah.
All right,
For
we're
chapters
done.
5 and
I just was.
13. 13 is the one we're gonna be.
I actually.
Okay.
But we have to present it, is what I'm saying.
Yeah.
But yeah, he wants all the slides printed.
Okay. Did you,
Just print form.
you just found them on here?
Yeah.
Great. Okay.
Thank you.
Where they labeled them?
Like Bodie.
We can do it on Tuesday. Henry? We'll
Yeah.
do it on Tuesday.
On Tuesday?
Yeah.
Okay, yeah,
I'll do yours on Tuesday.
that works.
But you get, you're fine. There's some stuff.
Okay, thank you.
Which ones did we need, Henry? We needed, fucking Henry Colby, we needed 5, 13, and then another.
Wait, what happened to you?
No, that's because I had 2 midterms yesterday.
I got like a 55.
I saw blind.
Swear to God.
How did, like Frank exam?
Yeah.
55?
55.
Kidding me.
No.
I think I'm making
Fucking, no, dead ass.
fucking
We
like
have
the
one
best
more
surgery
down
ever.
there.
I'm serious.
Somebody
How did you
else
get a
wants to
55?
do it
Like,
yourself.
why you didn't give the exam?
I don't think he likes it. Not, I shouldn't say that, I shouldn't say that.
Did you not know the formula for WACC?
Oh, no, that was fine.
Really?
It was,
How did
yeah,
you get a
the whack is fine. It was on the,